On the 13th of August, 2026, the European Central Bank published a survey that should make everyone rethink the cashless narrative. In the euro area, 92% of physical businesses now accept cash, up from 90% in 2024. Cards remain at 88%. The direction is striking. Cash acceptance is growing, not shrinking. Cash is also still the most common payment method by volume and value. After years of headlines about apps and cards taking over, central bank data says banknotes and coins are still the anchor of everyday trade. The rebound is not random. Post-pandemic in-person shopping has normalized, bringing back tourists, older customers, and cash-heavy sectors like markets and cafes. Merchants facing higher costs also see cash as a way to avoid card interchange fees, failed terminals, and chargebacks. Cash remains the most inclusive tool for lower-income households and people without reliable digital access. The same ECB survey shows mobile payment acceptance is rising, almost doubling in some physical settings, but from a low base. This is not a rejection of digital, it is merchants keeping a resilient, zero-friction fallback. Compare cash with crypto. The same study reportedly found only 0.2% of euro area merchants accept crypto assets. That is 0.2%. At that level, crypto is functionally irrelevant as a payment method, even though it remains heavily traded. Why? Volatility makes pricing difficult, regulation is fragmented, settlement can be slow, and checkout demand is weak. Card and mobile payments are genuine competitors to cash, crypto is not. This draws a sharp line between an asset people hold and a currency people actually spend. For everyday people, this matters in two directions. If you rely on cash, you still have strong practical access across the euro area, and the ECB data strengthens the case for protecting ATM networks and cash infrastructure. If you run a small business, refusing cash is increasingly a commercial mistake, because 92% acceptance shows cash users remain a large part of spending. There is also a policy dimension. Governments cannot assume the public is ready to abandon notes and coins. This survey complicates any plan that treats cash as a legacy system. The near-term evidence points to a hybrid system. Mobile payments will keep climbing from their low base, and card acceptance will stay broadly stable. Cash acceptance may hold in the low 90s as long as physical retail remains important. The real risk is a quiet two-tier system where older or lower-income consumers lose convenience if cash infrastructure is cut. Watch for national policies on access to cash and any ECB follow-up on a digital euro. The future is not a clean line from cash to digital, it is a messy, layered transition. The headline from the ECB is clear: cash remains the most widely accepted payment method in the euro area, and its acceptance is rising. That does not mean digital payments are failing, but cashless predictions are premature. For consumers and businesses, the practical takeaway is to stay flexible, keep cash as an option, use digital where it helps, and ignore the myth that notes and coins are history. That is the lesson from the data on Saturday, the 15th of August, 2026.